All right, I'm excited about this video because in this video we're going to talk about divergence, hidden divergence specifically. Hidden divergence is our number one setup in our group. We utilize it all the time to find good trades. If you remember the EU trade that we're in, we're currently right around $3,000 now that we're looking at the MT5. We got our stop loss in, we got our take profit in. But when you look at it, from this video's perspective, what you're going to learn, excuse me, let me pull up another chart. What you're going to learn is this red line is where we entered into that EU trade. We entered in right here and then we caught the sell down. It hit structure, which was resistance turned support. It hit structure and we should have exited that trade right then, profited about $7,000 and moved on with our day. But the reason why this was a good sell off, the indicator for us is a couple things. So if you notice here on the TDI that we learned about in the last video, you have a shark fin right here. The RSI is breaking the 75 level and it's breaking it above the bands. And so that's a signal that price is going to drop. And so it did drop a little bit, but it didn't drop much. It then went higher. And so for us, when price action is doing this, where you had the shark fin here and then it dropped down and then price pushed higher, where this peak is higher than this peak, and then you have a shark fin doing the opposite. So the shark fin, or right here, this peak is lower than this peak. And so if you see this peak, that peak is higher, and on the TDI it's lower. That's called divergence. They're going in opposite directions. Let me color this red so that you can see it. I'll color this one purple so that you can see it. So you can see that this is going here. Let me color them both purple. And so that's what we call divergence, and that's what we're going to learn about in this video. Because when that divergence hit, you see that that was the signal to take the sell and to send this down. Now, we didn't know that at the beginning of the training, but we know it now, and that's the reason why this fell down to a level of support. So we're going to learn about this technique more in our video. It's going to be number one for our trade setups going forward. Because sometimes there can be false shark fins where you may see a shark fin and the shark fin doesn't play out. But when it doesn't play out, it gives us a better entry. And that's called divergence. And so we trade shark fins with divergence. And I'm going to explain what that is. So specifically hidden divergence. Okay. Stay with me. So we have an uptrend here. Prices come down. Now we're uptrending. Price has climbed on top of this trend. And now this trend line is acting as support, where it's climbing. This is the first touch. Goes up, comes back down, touches it again, comes up, touches it again, goes up, and now we're at that trend line at an area of support that was past support here. And if you look all the way left, it was past support in the past as well. And so we're at an area of support. We have a trend line. We have a 50 MA coming up to this area as well to act as support. So we have a lot of things converging at this area. And so when we look at this, we don't have a shark fin, but what we have is divergence. And I'm going to explain this. When price comes down, it creates a lower peak. And you can see that lower peak on the TDI. It's the lower peak here. The last time it touched the TDI, or excuse me, the last time on price action that it touched the trend line was here and here. These are the last two times that it touched the trend line.
However, when you look at the TDI, those two times are right here and right here. And even right here, this area right here is right here. On the TDI, the current peak is lower than these peaks. So the trend is going this way. On price action, the current peak is higher than these peaks. We call that divergence. That tells us that the market is getting ready to turn when you see divergence. When the TDI goes one way and price action is going the other way. That's one component. Then what makes it even more confluent for us is that that's happening at the 50 MA. Whenever you see divergence happen at the 50 MA, that's a sign that the trend is going to continue in the original direction. What was the original direction? It's an uptrend. So the uptrend is getting ready to continue, and we call that hidden divergence at the 50 MA. It's when we have a level of support, we have trend line support, we have 50 MA support, and we have divergence from the TDI. So we can take this trade right here, pull our stop loss below the 50 and below the trend line, enter in here, and catch it to the upside. That is a significant play, and you can see the result. That price bounced off of that and went to the upside based off of hidden divergence. All right, so does everybody get the concept of hidden divergence? Or any questions on hidden divergence? Good, good, good. All right, let's build upon this. Let's look at another example. All right, so here we have this first piece. We have hidden divergence. So we have, this is a current trade that we talked about, where you have the trend line touch, and then you have the 200 MA that's following the trend line. But when we looked at this before, we got the initial shark fin right here. And so the shark fin went up, and it did play out. It went up, but then it hit this level of resistance and dropped down further. When it dropped down further, then price action, this is the peak here, it dropped down further than this peak. However, the TDI, the shark fin, is lower than the price action. So this is what we call shark fin divergence. It's our best trade setup. It's better than a shark fin. It's when you have a shark fin, price goes up, it then comes lower than your shark fin and hits a trend line, hits the MA, and the TDI is higher. This plays out, and I don't want to give a percentage, but I see, 90% of the time or 95% of the time, a high probability of time, shark fin divergence normally plays out. So the shark fin is lower on the TDI, but on price action, it's higher, and the current price is lower. On a trend line, on a MA. So we can take this with confidence that price will push up. This is a current trade that we're in, where price will push up from there, and we'll take it from the 200 to the 50 MA. Everybody understand this one? This is our number one trade setup is shark fin divergence.
I'm closer to understanding.
I thought the support and resistance was more popular to use. the one we learned yesterday.
Yeah. So you can see that this is that this line right here, this was resistance. I don't have it drawn there, but you can see price come up and reject there. Then it comes up, it falls from here, it rejects right here, falls, and then it comes up and it breaks through that. And then comes below, and then it starts rejecting that line again.
Oh, okay.
And then it comes up and then it climbs on top. Now this resistance is now support at that same line.
Okay, so same thing.
So it's the same thing. I just didn't draw it on here.
Okay, thank you.
And so that you're going to see that because usually when you spot divergence, it's usually going to happen at an area of support, turn resistance, or resistance turn support.
Tim, can you clarify again the difference between hidden divergent and divergent?
Yeah. So hidden divergence is going with the trend. Regular divergence is going against the trend.
Gotcha.
Right.
Thank you.
Yeah. So if the trend is going up, right? So this is hidden divergence. But let's say we spotted divergence up here as a trend. It would be a signal that trend is going to reverse and counter trend. So that's the only difference. And hidden divergence will take place where there's a MA, a moving average. Regular divergence will not. So regular divergence, there won't be a moving average because it's going counter trend. You won't see the regular divergence or MA at the regular divergence. So as you, because this is the same thing over and over and over and over again, it never changes. Because of that, your eye will be developed to see it. It seems like a complicated strategy, but you're not looking for anything else but this. So your eye is going to get used to seeing it. And it's just a matter of how much time you put into seeing this. And so we spend time in the morning only looking for this, for these type of setups. So that's why we get really good at spotting. All right, let's look at another example. All right, this is example. We have a TDI here. And so you can see that even though we're moving sideways in price action, we're really not creating a high and a low, but we have found a trend where price is rejecting off of. We have a touch here, touch here, touch there, touch here, touch here. Then we break that. So now it's support. We break, now it's coming back as resistance. It's coming back as resistance on that trend line and on a minor area of support here that is now resistance, and MA is coming down to meet it. So that's a 50 MA right there. And so when you look at the lower highs of this trend, here's the high, it dips down, creates a lower high, lower low, lower high, lower low. Now we're at a lower high. So this is a trend, right? And so hidden divergence is trend continuation. So you have this peak here, and then you have this peak. When you jump down to the TDI, the current peak is higher than this peak. This peak is right here. That's lower on the TDI and higher on price action. So the trend line rejection, the resistance rejection, the 50 MA, and the hidden divergence is a sign that this is getting ready to continue the trend to the downside. So when you look at that, that's exactly what happens, is that price falls from there. And we can put a stop loss just above that, equal to the last high. And usually I like to pull it above the last high, because if just in case price breaks through, it's still within structure as long as it stays below that. I like to pull my stop loss just above that. And then you can write it down because it's going to create a new low. All right, so does that make sense to everybody?
Yes.
All right. Let's look at another example. All right, price is coming down. It hits a trend line where we're seeing these rejections come on this trend all the way down. So we got clean rejections off of this. It's hit that multiple times. When we get down to this trend line, we can see the last time it hit was a shark fin. So we see the shark fin there that is lower, but price action, the price is lower. So that is shark fin divergence right here, which is a sign that we're getting ready to reject and go to the upside. And that's exactly what happens. So that it rejects, it dances a little bit, and then rejects and goes to the upside. What does it go to? It goes to structure. So where is structure? There's a trend that's happening here that we found. If you pull this all the way through, it's support here and here, support, support. Then it breaks support, comes resistance, then it comes support. Now it's resistance, resistance, then it goes to resistance. So when it left here, it's just going to the structure. And that's where we got out. All right, so that is our strategy. That's the only thing that we trade every day that we look for. All right, so I'm going to pull open a chart, but let me stop and see if there's any questions. Any questions so far? How are we feeling with this information? So you've gotten through a lot, and you've gotten to our bread and butter strategy of how we trade.
I feel like I need to study it more.
Yep. And that is the responsibility after this is done, is that you have to study this over and over again. You got to go through the charts. You got to back test it, go look for shark fins, go look for area supports, and see what price did. So that is, the more that you do that, the faster you're going to grasp these type of concepts. And it's just the amount of work, that is the work. You have to keep looking for this. Let me show, let's go and do that for a second here before we move on. I have a chart, the charts pulled up. You can go to any chart. It can be stocks, it can be oil, it can be gold, it can be indices. We trade it the same way. Doesn't matter what the chart is. As long as it's a chart, we can trade it. And we trade it with this strategy. So I'm just going to go to the random chart. This one is ranging right now. And we're just looking for shark fins. So I'm on EJ on a 4-hour. And right now I can see it's just about to shark fin. It's just climbing on top. And I can see we're at an area where we're getting a lot of rejections at this area here. And so I'm looking to see if this area is going to break or is it going to shark fin. Technically, we could probably see a shark fin here because it's right at the 75 mark and it's above the band. Right. And so we may get a reaction at this level. Looking left, we had a lot of reactions at that level. All right. So we may get a small retracement to that level. One thing that you can do, I'm on the 4-hour and I almost have a shark fin. If you go down a time frame, usually it'll tell you if it's going to shark fin. So if I go down a 3-hour, what I see now is that the bands have opened up and this is starting to range underneath it, which means that we're going to climb higher. It's not close to being a shark fin. Or actually, I take that back. It actually is. I'll tell you why. All right, so here we're almost at a shark fin. Okay, stay with me. We're almost at a shark fin. We can see that here. Go down one time frame to the 3 hour, and we have the divergence. So here we have a shark fin on the 3 hour right here, which is this peak, this last peak. This peak is lower than current price action, but it is higher on the TDI. So that's divergent on the 3 hour and almost a shark fin on the 4 hour. So we're going to let this push up and become a shark fin. We already have the divergence on the 3 hour. We're going to wait for the 4 hour to become a shark fin. Now let's go a time frame lower. Let's go to the 2 hour. And it's the same thing. We're divergent on the 2 hour. And we're sort of ranging on the 1 hour, which just tells us that this is still wanting to push up. So we'll give this time for it to push up. This 4 hour candle closes in 38 minutes. And so at that time, we'll see if we want to look at it. But that's how we evaluate it. We found the area of support. It's ranging. So it just goes from top to bottom of the range. So that's the range right there. It's just bouncing in between this range. It's not trending. So it's just bouncing in between the range. And so we're just seeing what's going to happen at this area. All right, let's go to another setup. Let's see, EuroCAD. All right, so we don't see, we're on the 4 hour, and that's usually on Forex. The 4 hour gives you a nice baseline. 4 hour gives you a nice baseline. And so right now we can see that the TDI is in the middle and it's nowhere close to it. So we don't really want to change the trade that. Now, some things that we do on the call is we'll evaluate what is the level that it's headed to. And the closest level is right there. That's old support. We broke it and then we retested it. And now we're heading back up to that level. So we'll see what happens once it gets up there. But right now, it doesn't have anything that we're interested in. You know, it's just trending, and we'll let it get up there and see what it looks like. But we're not interested in it because we can't take that with confidence because of where the TDI is. All right, let's look at another one. Let's look at, let me see if I'm going to flip through here until I see one that's close. All right, let's look at this one, Bitcoin. Well, we're trading Forex, but I'm going to look at Bitcoin real quick. Bitcoin has on the 4 hour, this is a shark fin. All right, so let's look at past shark fins on Bitcoin. Here's a shark fin on Bitcoin on 4 hour. Price pushed up, went above the band here, and then closed. If you look at that, this is what it did. It came down, which is that shark fin produced 1,400 pips of a fall. 1,400 pips. So that's a shark fin. And then let's look at this shark fin. The shark fin on the bottom was right here. And it produced, that shark fin produced 2,500 pips. So when we spot those shark fins, here's a shark fin here that played out. And then we had a shark fin here that played out. And it's still playing out. So actually we're at 1,700 pips right now. All right, so that's the beauty of shark fins. So right now where price is at, it's a shark fin. And if you look, we have an area of, this is support, resistance, 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 resistance. So this is minor structure right here where we're getting reactions. Currently, so we have reactions there. I'll open up some MAs. We're on the 200 MA right here. And then currently where we're on somewhat of this trend line where we got touch, touch. It broke through for a little bit, but it came back, touch, touch on the 200, and we have the shark fin. So what is price going to do? We can guesstimate that it's going to pull. We want to set the stop loss just below the trend line and the 200 MA. And then we'll take that from the 200 MA to the 50 MA, which is this structure right here, where it was resistance, resistance, and then now it's support at the 50 MA is where we're taking. That's the setup on Bitcoin. We're going to go from here up to there. All right, and so that is just a shark fin play. Now, if you look left at the last time that it touched this trend line was this area. If you look at this area down here, is this area right here. So you have divergence as well, where price is going that way, but up here is going the opposite way. So you have divergence, you have a trend line, and you have structure, a support structure, and you have the shark fin. So now you can take that trade up to the 50. Does that make sense?
Yes.
So we're putting all this stuff together. All right, let's look at one more example. Then we're just going to break for, let's do a 2-minute break after this. Let's look at one more. Someone name a pair that they want to look at. Name anything. It could be a pair, a stock, anything.
Can you do GBP Swiss?
Yeah.
CHF? Because that was my homework last night. I charted it and put in a trade for on the desktop.
Okay. So we're going to look at it on 4-hour. Right now, TDI is in the middle.
Mm-hmm.
It's right on that 50. And it's in consolidation. So we don't want to trade it, but we know where it's going because we have clear support right here.
Mm-hmm.
And here, even though it's wicking down, we have clear levels of support. And then this is resistance right here. So we have support and resistance in this area. But it's in a range where it's going sideways. And but we do have the support. Now, with this, we can also see that we're in somewhat of a downtrend. It's hard to see here. I can probably go to a higher time frame to see it better, but we can see that it's producing lower highs and lower lows. So it's going low, high, low, high. Excuse me. Let me get this a little cleaner. Hold on. Let me use something. See if I can do some straight lines.
Mm-hmm.
Right. So we can go low, high, low, lower high, lower low, lower high. So now we're headed to potentially a lower low if this area is broken, which it probably will be, to go to a lower low. So we can kind of predict where it's going just based on that structure. But for us, it's not giving us an opportunity to get in at this point. So we would pass just based on that. Now, if it did something where it breaks this level of support, comes and retests and gives us divergence at that level, then we could enter in here to take it to the downside. So that would be this. This would be if when it does, if this dropped, TDI drops, and then let's say this comes up higher at this point. Here it's lower, here it's higher. That would be the divergence at the retest to say that it's going to reject there and come down. And so then we could enter in there and take it down. This is showing us that it's going up. This is showing us that it's going down. That's the divergence at a level of resistance. But it's not showing us that now, so there's no trade there. And so you can come to that conclusion within a matter of seconds. Wouldn't take much analysis to come to that conclusion. Right. And so you can see the range, you can see that level of support. This range has been the bottom for a while. Right. So you could see that that's where it's been sitting since all year. It's been right there in that range all year. Since last year, actually. So it hasn't passed that. It's just been ranging back and forth. All right, give me another pair to look at. We'll do two more, then we'll break.
Can you do gold and USD?
Yep. Let's look at gold. All right, so got a lot of stuff going. I haven't touched fibs yet. Take that off. All right, so this was actually I'm looking at the day chart now, which is longer for swing traders that swing this long for a long period of time. But what we have here is we have an area of resistance that's actually resistance here. I could probably go back further, but resistance here back in last year. Then it turned into support here. And that's the area that we just was on, is that resistance. It's actually a significant area right here. And we actually traded this one. So it was support, it broke through, retested, and became resistance and went to the bottom. Then it broke through, and now it's support. Went to the top, and then it came down, retested that support, and that support held, but look what it gave you, a shark fin. A nice clean shark fin on the daily, and now that's playing up to the upside. And should be good to this 50 MA on the same time frame, which is this area of support. So it's going to come up to this 50 MA right here, and then you evaluate it from there. Now, when this comes up, what we're looking at is the TDI. So when this comes up here, the last peak is right here, and that peak is right here. So if the TDI rises higher at the 50 MA, what does that tell us?
Hidden divergence?
Hidden divergence at the 50, which is trend continuation, which is support now turn resistance. So we would be looking for a short position at the 50 for trend continuation to the downside. And we would just go to the closest MA on that same time frame. If the TDI rises higher than this peak and this remains lower, that would say we have a level of support turn resistance on a trend line while we have hidden divergence and that would be the sign to get into that trade. All right, so that's on the daily. So that's going to take a while for it to climb, but let's look at it, what it's doing on the shorter time frames. Let's go to the 4 hour. So on the 4 hour, it's showing us that you got the shark fin, the first shark fin. The shark fin comes down and it goes down a little bit. It's not as significant, but it still goes down. It's like 91 pips. So it didn't fall drastically, but it's just a pullback. So that shark fin is counter trend shark fin. So it's just a small pullback, which is 91 pips, which is significant, but it's a pullback. So it's not going to go all the way down when it's this aggressive move up. It's in an uptrend. So then it goes down, and what does it do? It creates another shark fin. What does that shark fin give you? It gives you 118 pips, 118 pip drop off of that shark fin. But it's a counter trend shark fin. Everybody can see that it's bullish. And so now it's pushing up, and now it's giving you the divergence, shark fin divergence at this point, because this is going up from here to here, and this is going down from here to here. So now we're seeing that what this is telling us is that the bulls are running out of steam. They're running out of steam, and there's probably going to be a retracement that happens here soon on its way up. But this retracement is going to be counter trend. It'll just pull back a little bit and then can go higher, pull back a little bit, go higher, all the way up till it gets to this trend line, and then we can take the sell down. Let's go to a lower time frame. So you can see the shark fin there. It pulled back. Now your shark fin divergence is there. So we should get a pullback in there. Let me see where my MAs are. Yeah, the MAs are acting as support. Go down frame lower. And so now we can see on the 30-minute, the 800 MA is acting as the rejection. And so that's the shark fin divergence right there at the 800 MA acting as rejection. So you're going to get a small pullback, and probably to the 50, and then it'll go higher. So that's how we utilize and bring those things together.